Guys, welcome back to the Freak Network podcast. Unfortunately, guys, this week's podcast is going to be a little bit different to how we normally do it. Obviously, normally, it's Ken introducing the podcast and then I'm giving some comments and la-di-da-da. But unfortunately, Ken is away at the moment on business in Dubai, expanding the business, doing all the business things, whereas I'm just here doing the analysis. But we've been unable to get like a proper internet connection going with him, basically, so we can't do the normal podcast that we normally do. So I'm taking over this week. I hope you guys still enjoy. I'm not quite as flamboyant and fun as Ken, but I will try my best. But more importantly, I'll try and keep things informative, make everything really understandable for you guys. So let's talk about what happened in the market this week. I think the first thing we should really talk about is the fact that, well, to be honest, generally we saw some very, very big moves in the market this week. Broadly speaking, it was risk on in the FX markets. So risk assets doing well, euro doing well, and then the dollar basically not doing quite so well. So yeah, why don't we start with the dollar? I've got a Dixie chart here. This is on a daily. And you can see in the past 5 days, 1, 2, 3, 4, and number 5, we have fallen a long way. Okay, Dixie was, it was started the week around 96, now well under 95. And that pretty much means, guys, if you just have a look, we have now fallen to, slightly below the March low. And you remember, guys, when coronavirus first went global back in the, do you remember about 21st of February here? Just look where my mouse is. COVID-19 went global. And all of a sudden that was seen as a dollar negative. So you saw dollar selling off really, really hard. But then all of a sudden, by around this point in March, everybody started panicking. Everybody started panicking and selling everything, including safe havens. And as a result, over the course of, literally like 2 weeks, we saw dollar massive rally up to, where did we get up to? 103. But anyway, this low, I'm droning on now about the dollar, don't need to. This low here in March, we have now reached. So that's quite a big milestone. If we can get through this low, which for reasons I'll explain why in a second, I think we probably can. There's room to the downside. I mean, you can see me zooming out on the chart. Why don't I put it on a weekly? There we go, that's a better view of things. There's room to the downside. I mean, the next significant level I would say is, well, let me draw it for you actually. Let's get horizontal line going. Probably around here, so where's that? That's just under 94. And then after that, gosh, I mean, you could potentially argue 93.20 right here. And then potentially you could argue there. But then those aren't massive levels. After that, we could be on to go sub 90. Back to these, when was this? Early 2018. We could be on to test that. So big potential downside moves for the dollar. So I was going to say, fundamentally speaking, why are we bearish dollar? Well, there's been a few factors. A few of them been specifically for the US, dollar related. A few of them have been to do with the rest of the world. So let's start with the European Rescue Fund agreement that we had on Monday. That created, basically, that was the key thing that created the risk on this week, okay? Massive rally in euro. Let's just look at euro dollar whilst we're talking about these currencies. This is on a daily. Again, you can see euro dollar has just absolutely flown to the upside from beneath 114.50. Where are we now? We're around 116. Huge rally for euro dollar, and it's on this recovery fund. So basically, on Monday they agreed that they're going to have a 750 billion, the EU are going to have a 750 billion economic package. They're going to use that to invest in the economy to help the post-coronavirus economic recovery. 390 billion of that is going to be grants, so the EU is just going to give that to countries. The rest, 360 billion, is going to be cheap loans, just making it easy for these countries to pay back that money, basically. And this has been taken as a huge positive by the market, and you can see that in this euro dollar chart. Huge optimism to do with the Eurozone. Let me get rid of all these old drawings, you don't need to see them. The key thing really to look at is just the last 5 days. But it wasn't just euro with these massive breakouts to the upside. Like I said, it's more risk on generally in FX markets. So, I mean, let's just look at a few other ones. Aussie dollar. Let's put Aussie dollar on a weekly, because Aussie dollar broke out to levels that it hasn't been in. Let me just get rid of all these drawings. Yeah, this is a weekly, okay? So Aussie dollar's at levels that it hadn't really been at since April. Yeah, look at that, April 2019. Let's look at Kiwi dollar. On a weekly again as well. I mean, pretty much got back to levels it was at the start of the year. And let's just go with US, with dollar CAD. Let's get rid of this old technical analysis. Again, on a weekly. Actually, let's put it on a daily. The moves haven't been quite as impressive with dollar CAD, but we were in this bind for sort of 2 months, which I'll just draw up here. We were in this range. And this week, as you can see, we broke out the bottom of that range. So we could potentially be on to test this June low very soon in dollar CAD. And that's literally all of this, guys, is to do with risk on, which is good for Aussie, CAD, Kiwi, and to do with dollar weakness because of partially the recovery fund. But let's just go back to Dixie. What other reasons has the Dixie been under pressure this week? Well, it's been things that we've been talking about for a long time. Ever since this decline first started back over here in May, we've been talking about how dovish the Fed is compared to other central banks. Look at the rate at which their balance sheet has expanded compared to other central banks. Pretty much the rate at which they've been printing money, increasing the supply of dollars, way faster. So that's been a huge contributory factor. But since July, since around here, you can see, another big factor has been the fact that the coronavirus outbreak in the US has been getting a lot worse, which means the Fed has to go more dovish, and it's bad for the US economy because it means more lockdowns or slower reopening, more fear amongst consumers. Meanwhile, other developed markets, Eurozone, UK, Australia, New Zealand, Canada, they've contained the virus much better. So basically it puts the US economy at like a disadvantage, if you like. So that has been another big reason why we've been seeing this decline. And another thing that we've been talking about this week with the members is politicians in the US at the moment, the Republicans and the Democrats, they're trying to hash out an agreement on more fiscal stimulus. This would be the 4th fiscal stimulus bill. And markets are very disappointed at the lack of progress which has been made. Just this week, basically, we were hoping to have these proposals come forward on Monday, but it looks like it's been delayed until next week now. Because, I mean, I'm speaking on Friday, so it's not going to come this week. So, obviously, fiscal stimulus normally seen as a good thing for a currency. No difference with the dollar. So the fact that there's been a delay to this fiscal stimulus, dollar negative. What else have we got to talk about? Let's talk about a few different currencies. We've been droning on about the dollar and the euro, I guess, a little bit as well. Let me get rid of this technical analysis. Yes, GBP. Look at GBP this week. It's higher on the week. This is on a daily, by the way. You can see one day. We are higher. We started the week around 126.50. I mean, we're settling around 127.50. So 100 pip gains on the week. But when you compare that to Aussie dollar, Kiwi dollar, Euro dollar, nowhere near as strong gains this week. As you can see, we pretty much haven't actually moved in the past 3 days. Like the big move came. When did the big move come? Well, I mean, it was Monday, Tuesday, and we've kind of gone sideways since then. And that is literally because we've had basically growing pessimism regarding the whole Brexit situation. So middle of the week, I think it was on Wednesday. Yeah, it was on Wednesday. We had these reports come out. I can't remember who reported it. Might have been The Guardian. But anyway, it said that the UK government is close to losing hope entirely on getting a Brexit deal done by the end of the year. And we've had various other reports. We've had Michel Barnier speaking as well. No progress was made at talks this week. Basically, at the moment, relations with the EU not looking great. Okay, as we've been saying for a very, very long time, as Ken's been saying, relations are sour. And this pessimism around the low perceived probability that there's going to be a Brexit deal at the end of the year is weighing on GBP. Because remember, guys, if there's no deal at the end of the year, we're going to be trading, the UK is going to be trading with the EU on WTO terms, which means tariffs, it means checks at the borders, it means all things which aren't good for the UK economy, aren't good for the Eurozone economy either, but much worse for the UK economy because we're a lot smaller, and as a proportion of our exports and trade, we do a lot bigger proportion with them than they do with us. So it's seen as a big GBP negative. That's what most of the economists and everything think anyway. So that's why GBP has been a bit of an underperformer this week. What else have we had happen? Well, here's another interesting thing, guys. Today as in Friday, I'm recording this on Friday, FX market's been a little bit more risk off. Some of the reasons I've already explained why, like the lack of progress on the stimulus bill. But we've also had growing US-China tensions this week, which have started to weigh on things a little bit in the last few days. I mean, let me just pull up the S&P 500. You can see, yeah, this is on a daily. It's been on the back foot the last 2 days. S&P 500, by the way, great gauge of risk appetite in the market. Why have we been on the back foot? Well, yeah, delays on stimulus, US-China tensions. So the US closed this consulate in Houston, this Chinese government building, basically just closed it, surprised everybody. China's responded by closing a US government building in China. So it's not looking good on the US-China front, although I think things probably won't escalate any further. But we shall see. Risk assets didn't like it, as you can see. The other thing is the US coronavirus outbreak continues to worsen, which has also been weighing on dollar, but also weighing a little bit on risk appetite at the end of the week, because the US is reporting more than 70,000 cases a day consistently now, and more than 1,000 deaths a day consistently now. So the outbreak not heading in a good direction. So like I say, we are a bit risk off towards the end of the week, but just to finish off on a positive for the week, we had PMI data just now, this morning, out of the Eurozone, out of the UK, and it was good PMI data. I mean, in fact, let me just show you on the investing.com chart. Zoom in a little bit. Oh, I zoomed in too much. Here we go, look at that, just these 3 rows here with my mouse, Eurozone. There you go, manufacturing 51.1 over higher than expected 50, 54.8 higher than expected 51.1, and services 55.1 higher than the expected 51. Good, Eurozone is in expansion, that's what we want to see. Just zooming down a little bit, look at these GBP numbers as well. Good, 57.1 for composite. Higher than expected. 53.6 for manufacturing, higher than expected. Services, likewise, higher than expected. This is good, okay? And it probably is going to take the edge off of risk off today. Good data, always nice to see, isn't it? Guys, I think those are the key things this week. In terms of next week, the key thing we got next week is the Fed. The Fed, the FOMC, they're getting together. Rate decision is going to happen on Wednesday. What are we expecting? Well, to be honest, there's mixed forecasts for this one, but the general consensus that I'm seeing is the Fed in recent weeks have been talking about how they're going to move towards further stimulus. Sorry, just get my charts back. How they're going to move towards further stimulus. But most people think that this meeting is probably going to be too soon to actually pull the trigger on that further stimulus, such as yield curve control or something like that. What they will probably do is just hint that that is the direction that they're going in. Other than the Fed next week, which could be a dollar negative, by the way, I should have said. Other than the Fed next week, not really that much. A few smatterings of data, I think like Chinese PMI, US durable goods. But other than that, just keeping out on the lookout for the usual themes: coronavirus, fiscal stimulus, US-China, all these stuff that have been moving markets. That is pretty much it from me for now. Unfortunately, I don't have the same sign-off as Ken, but I do hope you enjoyed this slightly different podcast. We will be back with the normal podcast next week, guys, so please do not worry. Have a good one. See you guys very soon.